Welcome to The Chat, where we take you behind the inbound scenes of some of the world's fastest growing companies. For the past 9 years as Chatmetrics, we've had an exclusive inside view of how these industry leaders are revolutionising inbound marketing and sales across diverse sectors. Each week, we bring you conversations with top minds in marketing and sales, sharing insider secrets and strategies that drive inbound success. Join us on The Chat, your front row seat to the future of inbound.
Today on The Chat, we have a fantastic guest who's an absolute expert when it comes to helping business owners achieve successful exits. Joining us is Justin Bunt, a business exit specialist with MMJ Business Sales and Acquisitions. Justin has helped countless business owners not only prepare their business for sale, but also maximise their exit outcomes. With over 2 decades of experience across various industries, everything from digital marketing to corporate catering, Justin brings a wealth of knowledge about what makes a business truly saleable and how to navigate the often complex process of selling. He's deeply connected with the Illawarra and Southern Sydney business community, praises over 200 businesses each year. Today he's here to share some of that wisdom with us. Whether you're an entrepreneur looking to sell or just someone thinking about the future of your business, this episode's for you. Justin, welcome to The Chat.
Thanks, Terry. Great to be on The Chat. Really happy to be here.
Look, The Chat really is predominantly about sales and marketing, and I guess the exit of any business is potentially the ultimate conversation. But before we get into that in detail, what's some of the major challenges? You've had a broad range of experiences across businesses. You've been a founder yourself. What's been some of the major challenges or struggles you've had with growing a business?
That's a very good question. So my first business was a corporate catering business that you mentioned. That was definitely a startup. We bootstrapped that. It started as That Wicked Sandwich Shop in a little suburb in Sydney. And we basically struggled through that first 1 to 2 year period where we were working second jobs just to pay the rent. We found the best way to get customers then was go knocking on doors. So we used to go around the local businesses and take out trays of food and just say hello and get to meet people that way. And we didn't actually know that there was such a thing as catering. We were just taking our sandwiches around. They're actually like 1 foot long subs before Subway was in Australia. Went door knocking, met the local business community. They started saying, can we get this on a plate? So we were like, sure. And then a catering business began. It became probably Sydney's biggest corporate caterer, I'd say, by the time we sold that back in 2000. And then I worked with the owners aboard that to keep growing to another level with them. So we've definitely learned from that initial door knocking phase. By the early 2000s, we were definitely switching to more of an online marketing base to grow the business into businesses throughout Sydney. And that was very effective for us, like back in the early days of Google Ads. Not so much social media then, but definitely Google Ads. We were pretty good at that, at getting new customers. And we didn't give up on the direct approach to the door knocking style stuff as well. That was how we grew that business. Very different now in the world of business sales where we need to attract vendors. People want to sell their business. And there's many different ways you can go about that. Do you want me to go into depth with that sort of approach that we're doing now?
Look, so I know you've worked with countless owners looking to sell. What's some of the biggest misconceptions business owners have when they start thinking about selling their business?
I think probably one of the biggest ones is how long it's going to take. The average time on market for a business is about 9 months. And the even darker side of that is that only 1 in 3 on average actually sell. So you've a less than 50% chance of selling a business. I'm afraid sorry, go on.
What do you think the major factors are that determines whether a business sells or not?
Well, probably the biggest one is price. And that's probably the second misconception around it is what their business is actually worth. And sometimes that's come from, they might have got information from their accountant or from another third-party source. XYZ businesses sell for this multiple, but there's a lot of complexity to what actually makes a business's market price, we call it. Quite often it's just the industry you're in. Like it could be a time in your industry where the demand has dropped off. Class one is probably on the small end of the scale as the news agency, which was in demand 10 years ago. Now it's very difficult to find a buyer for that sort of business. On the flip side, you get a business like childcare, which has just grown in demand over the last 5 years in particular. And now they're very, very, very hot. So if one of those comes to market, we'll hundreds of inquiries for that. And then you trend pretty quickly.
Interesting.
Yeah. I'd say the other big factor, what makes it sell off the bat, is the level of dependence on the owner. The business is depending too much on the owner. It's very hard to find a buyer who's basically willing to step into those big shoes. The less dependent it is, the more potential buyers there are. Definitely opens up the field to investor buyers or strategic buyers, which is other companies that are acquiring your business.
Was one of the things I learned early on in my career, in my ex-corporate career, the importance of systems and processes in a business. And, there's one piece of advice I can give any business owners, particularly anyone that's looking just to have half of a life outside of their business, is businesses and processes. Get systems and processes in place. Don't let it be 100% reliant on you.
Exactly.
If they've got to call you every 10 minutes to ask a question, or you've got to make all of the decisions, it's not really a business. It's not much more than a job.
That's
that
right.
you've got.
Exactly right. It's a job with probably twice the hours of a normal job as well for some people. Yeah, definitely getting that reliance down on you is critical.
You mentioned timing in terms of the, I'll call it the economic cycle or demand cycle potentially. But what about timing within a business cycle itself? Can you walk us through what the perfect timing looks like for a business sale and how business owners should know when they're ready to sell?
Sure. Ideally, you'd be looking 2 to 3 years out on the horizon to sell your business. That just gives you time to put things in place that are not half-baked when you go to market. Things as simple, that first one I mentioned, getting your team upskilled so they can actually take on some of your role. That can take a while. You can't do that overnight. Getting the procedures sorted out. Making sure you're not taking the foot off the pedal as well. So a lot of business owners, particularly the older ones in that 60 plus age group, their business value can drop quite markedly in those last few years because they're just not putting effort in. And if your sales aren't trending south and your profits trending south, it's a lot harder to sell your business. So making sure you're still doing your marketing, staying growth focused, keeping your team motivated, all that sort of thing is also important. And that 2-year period also means you get your financials sorted out. If there's issues with your balance sheet, it's amazing how many businesses come to us thinking they're ready to market with big holes in the balance sheet or assets that are on there which they sold 3 years ago. And when you go to market, the buyers accountants, they're ruthless. They will tear your financials to shreds. So everything needs to be tidy to that sort of thing. And that can take a year or two just to clean that out without damaging you from a tax perspective as well.
If you're not starting with the end in mind of selling, then it's not necessarily that you're keeping all of these things intact and in the order that they should be in.
Yeah, possibly. Although I'd say most of them are just generally good business practice. I mean, having a balance sheet that's actually realistic is a good thing to have anyways. And as well, being growth focused, it's actually amazing how many of them are good business practice.
So what are some surprising factors that make or break a business sale? Are there things that most owners overlook when they're prepared to exit? You mentioned the financials and the processes. Anything else?
One that I've experienced is leases. So you own the property as well. In fact, those sort of business sales are really red hot right now. So it's business with freehold. A lot of buyers look for that. But if you're on a lease, which is the majority of business owners are leasing, making sure that you've got a good period of tenure there still, like ideally 5 to 10 years still in options. We have a lot of people that come to us and they haven't actually taken up the option on their lease. So theoretically, they're on month to month and they don't even realize it, which means the buyer coming in there, there's a lot of implications there. One is that they can't get finance if there's not a lease in place. So the buyer can't finance the sale. 2 is you potentially could actually lose your premises. If the buyer's flued up, they could directly approach your landlord, realizing you're not on a lease, and just offer to pay more money and you can be out the door. Doesn't happen very often. The risk for the vendor. So making sure your lease is in place, kind of related to that around your DA. So making sure you're approved to do what you're doing. Again, it's amazing how many businesses don't have that in place, and it doesn't actually get out until the crunchy end of the sale when the buyer's lawyer is looking at all the details and they realize that the business that's operating there is not approved, and that can derail the job.
I can imagine it would. Imagine that you get to a point, the final stages of a sale, almost cracking the champagne, and then find out that you're not ticking the boxes for regulatory approval. It'd be a heartbreak.
Yeah. Lawyers generally can be, they can be sale breakers, even the vendor lawyer. So a lot of our vendors will use the lawyer that they've used for family matters or non-commercial matters, and those lawyers can often be quite obstructive to the sale. Like they'll dig their heels in over points that really don't matter. Like for me, to the vendor, it's all about getting out the door and getting the money. But the lawyer or the vendor will often present problems that just demotivate the buyer and get tangled up. And if the momentum of the sale goes, the sale can fall apart over an issue which is of no importance to the vendor at all, just a legal tangle that the lawyer wants to get involved with. So making sure you're aware. So you'll find a lawyer will get tangled up in even something like restraint of trade, where the owner's retiring, and the buyer might want a pretty tough restraint of trade in there, which the owner really didn't care about, but their lawyer will suddenly think it's an unfair requirement, and they'll fight on that point. And then the buyer starts thinking, well, hang on, maybe this guy isn't retiring. Maybe he's just going to start up in time, and just take off track unnecessarily.
Starts to bring doubt into the mind of the buyer, and as soon as that happens, then there's an issue. Interesting. The current economic landscape shifting pretty rapidly. How are you seeing these changes impact business valuations and exit strategies, particularly for those small to medium businesses? Yeah, there's a shifting phase into the small to mediums now. So there's a bit of lack of confidence, but it's not as bad as people think, actually. There's plenty of buyers still around. They're a bit more financially driven, so they're digging a bit deeper into the financials. Probably a year or two ago, there were still excuses post-COVID lockdown, etc., where the financials didn't really mean that much. It was more about what are you doing right now. Those days are gone now, so people are looking at the 3 years and really drilling down hard on that. But generally, buyer demand is there. There's still some sectors that aren't seeing a lot of demand, and they're actually ones. They're more buy a job type business, where the problem there is that we're not seeing any redundancies in the broader economy right now. So typically, those 50-year-old guys who got a redundancy package were a great source of buyers for small businesses. They had money and they didn't have a job, so they're perfect, but they're not around. So that space is not being filled. So if you're in that bracket, it can be hard to find a buyer. On the flip side, the investor buyers, there's a lot of them around. So these are guys who have got $1 million+ to invest. They've got a pretty strict ROI looking for around 40% normally. They want the business very tidy, ideally into management, a lot of demand from that side. And then in between, there is that strategic buyer, which is existing business looking to grow their business by buying another business. And that's pretty healthy right now, especially industrial businesses. Okay. All right. Interesting. So that to be looking at existing businesses to bring on complementary business that might expand either their service offering to their existing customer base, or potentially a new customer base for their offering.
Yeah, correct. Either one of those ones could be the way to go. Or even in some cases, they want, I mentioned before, the business with the freehold premises. Quite a view for the strategic buyer that wants that space. Industrial property right now is really hard to get in our region anyways. We've had a couple of big sales where they've bought the business and the property, but their main attraction was the property. But they kept the business going well.
Right. Yeah, that's interesting. The areas that you've mentioned, is there anywhere that really stands out as a particular spike in interest at the moment?
Laundries. I think
really
laundry.
Why?
Laundry's huge right now. So I'd say all our industry sectors, probably childcare and laundry would be the top two by far in terms of when we list from those businesses, we get hammered with inquiries. A lot of the laundry spike is it's a little bit artificial in a way because it's been spiked by podcasts primarily, funny enough. A lot of podcasts around investing in passive business, and laundromats are said as a passive business. Now, when you get a laundry business, you find out that 95% of them are not actually laundromats. They involve staff still. We get overwhelmed with inquiries for that. And quite often the buyer will come from that base. They're looking for a laundromat. They realise that there's this other sector which is not quite as unstaffed, but can still be pretty good financial returns.
It's staffed and deliveries and pickups and consumables and all of those sort of things that you get from actually running a business. I mean, not necessarily potentially as complex as some, but it is a same industry, but a far step from simply having some equipment that, you're managing the electricity supply and grabbing the cash out of. So, yeah, interesting. Oh, look, you've worked closely with business owners for years. What's one story of a business exit that particularly stands out to you, and what lessons can others that want to exit learn from that?
It's also a good question, Terry. So I've got to just pick out a good one for you now. The one that's kind of the most iconic for me is the Australian listeners to your podcast probably know the Big Merino, which is up in Goulburn. It's a giant sheet, basically, which has a gift and fashion shop in the bottom, which is what we sold. That one just stands out for me, mainly because it is quite iconic. But we also, just the process there, they had a massive inventory. Like their stock levels were, the business is probably valued around $250,000. The stock was $400,000. Imagine that just changes the equation a lot for potential buyers, because they're still looking for that same return on investment for their whole investment. So part of that process was managing that stock level down in a way that didn't actually damage the business trading, but just making sure it wasn't as high. I think in the end we got it half what it was at the start. And then that one had to just find a buyer that was, the buyer there was probably a different category, which is, we call it the romantic buyer, which is an owner-operator that just they've got a dream to buy a business, and it just ticked their boxes on that level. They were a local resident, they were school teachers, career changers, actually not even from Australia, they're English people. And it's the boxes, they were great to deal with. It actually went quite smoothly in the end. It was the longest stock take I've ever been involved in. It took a week to count all those 100 and fluffy
and koala key rings,
the works. Yeah, it was a long stock today. Yeah.
So why do you think the inventory levels were so high in the first instance? I mean, obviously the cash flow must have been reasonably positive and strong in that business. So profitability, I'm assuming, was strong in that business to be able to carry so much inventory. But the flip side, was it, and I don't want to get into too many details here, but there's a whole host of reasons why inventory could be so high. Was it laziness? Was it buying opportunistically, larger volumes for lower pricing, that type of thing? How do you think the inventory crept up to that? Or was it just really not managing it?
I think it was more to do with the range. They had a big range and they were very supportive of their suppliers. So I think they've probably been on a limit a bit there. They were stretching themselves just to ensure that the stock, a long ordering cycle as well. So they had to order each season of the fashion items as well. And things like UGG boots, where you've got to have every size, that wears out pretty quickly.
Yeah.
You've got a few different brands and then you've got every size and every model. It did buy it that way. I think it was largely just the nature of the business. And maybe a little bit of, quite a few businesses were like this post-COVID, but they had supply chain issues back in 2021, 2022. They've now gone a bit the other way, where they have this buffer of stock, but I think it's time to start bringing it down. Those days are gone, and just bring it back to normal levels now.
Yeah. Well, it was a very interesting time when you had the issues with logistics and supply not being available. One of our clients sells shipping containers. And you would think with everything that was happening, but it just dried up. They literally, they went from buying 2,000 shipping containers a month to zero being available. There was just none available coming into this part of the Southern Hemisphere. It was crazy. Look, having been both a business owner and exit specialist, what's one piece of advice you wish someone had given you earlier in your career?
So the question, I think probably just that, maybe that real focus on being into your financials, like every day. I still see so many business owners now who don't know what's happening in their business. And this is even some larger ones too. I've got a commercial bakery at the moment, which is turnover close to 5 million. And just a real lack of awareness of where they're at profitability wise, and quite startling. I think back to my early days there, I wasn't like I didn't care about it at all, but I wasn't watching as closely as I would, and just making sure you're always growing your profit as well as your sales. My focus is more of a marketing type focus. That was my background. So I was always looking at growing revenue. I probably didn't look at the bottom line as much as I should have.
Do you think that, what do you think the reason for that is? Why would someone that's got like a $5 million turnover not be closely well enough knowing their numbers?
I think it's like financials are very rarely the thing that's screaming at you. Like it's, you got staff issues or customer issues or equipment issues. They're all things that scream at you. Whereas the financials, if you're not going backwards, then your financials aren't screaming at you. But you're missing opportunities definitely if you're not watching that closely, and you might not be looking at product lines that are actually losing you money, that kind of thing.
Do you find is there a certain background of operator or business owner that tends to have less of an idea of their financials than others?
No, not particularly. I think it's just across the board. It's probably just an individual aspect of someone who's more. I guess if you're a founder and you've come into your business because you're good at doing X, Y, Z. So say the baker, you're a baker, you're good at making cakes. The financials are a bit of an afterthought, and you've grown probably just because your product's good and your service is good. Then you're not making as much money as you could because you're not watching your costs closely.
And I think that in my mind, I think the perspective of being a practitioner that then becomes a business owner, often you're not always aware. You don't have the financial acumen to be aware of it. As long as there's cash in the bank, it's not the bank that's screaming at you.
And I think so often too, the accountant you engage is so critical. If you've got an accountant that can actually provide you advice beyond end of year tax, it can make so much difference. I'll go to that bakery example. I've actually had a lot of bakeries in the last year that I've sold. So 2 different bakeries. Okay. One's still for sale. We're closed, hopefully. That's the one that an older owner, fantastic guy, but hasn't had his eyes on the financials, particularly the last couple of years. And that's been the main problem with selling it. On the flip side, I sold one that was like a quarter of the revenue and 5 times the profit. And it was run by a 30-year-old who she'd started baking from home. She wasn't big into the numbers herself, but she had an excellent accountant. Her accountant was so on board and just had guided her from home baker to, she had a double shop frontage, still kept her focus on the product and service, but her accountant was there supporting her and just making sure that everything was in order. And when it came to selling that business, those financials, that got got the buyer's finance basically brought $1 million, which I would not have expected, but the numbers were so good and so tidy. There was no question marks on anything. That's what got that deal through.
I guess there's so many moving components to a deal, the complexities can be endless. I think, if I had a bucket of cash and I was going to go and buy a business and I didn't need financing, I'd be much rather looking at the lower profitable business than the higher profitable business, because I think the upside is so much more.
We mentioned under management before. Like, the demand for under management businesses is crazy. Like, people want that management team in place, and they'll pay a premium, like a massive premium for that. I keep thinking the same thing. Why don't people buy them not under management and then transition them? Because I think you can make a lot of money on that. The value of that business would double in 2 years if you got a good manager in there, and maybe he's in the same team that you bring in, do the tidy up, install a decent manager operationally, and then put on the market. I think that'd be a good way to make some money.
I think the biggest challenge there is finding people with the acumen to do that.
Possibly true. Yeah.
Yeah. You've got to have a level of business acumen. You probably, can't think of really, if it's not under management and it is pretty reliant on the owner, then you're really going to probably want someone with some industry acumen experience as well. And so, getting those two things coupled together with someone then that would have the desire to, work for an investor and go and do this as sort of a role, it'd be a fantastic business model. If you could put a team together, like a mini corporate team together to help come in, buy the businesses that aren't under management, transition them and flip them. It'd be, have everybody on a percentage. It'd be,
There's one other person in the business too. I see this a lot, where you find someone who's not necessarily in the management team, but who's operationally knows their stuff. And quite often will come off when we're doing inspections with potential buyers. Someone will step up amongst the staff and be very helpful. And you walk away going, with a year or two of training, that person could run this show. And I think that's what a lot of the founder owners in particular just miss that person. They don't realize that they've got someone a diamond in the rough there, which you actually step up and do their role, and maybe not as well as them from day one, but if they give them a year or so, they could do the job.
And in some cases, potentially even are doing the job unbeknownst to the founder. They think they're doing all the work and driving all of the outcomes, but it actually is somebody else in the business.
We do have a lot of owners that they're there at their business, 50, 60 hours a week. But when you drill down to what are you actually doing, they're not actually doing much. They're not contributing as much as they think they are. But then the buyer looking at that will go, no, they're working 60 hours a week. We can't buy this business. So like the advice is stay home, don't come here.
Look, for business owners thinking about an eventual exit but not ready to sell immediately, you've sort of covered off on this a little bit. What would be the 3 things that they can start doing today to prepare for a successful exit in the future?
Yeah, I think definitely at the top of that list is still making yourself dispensable, and that will take a bit of time. Management, that's right. Upskilling your team, delegating where you can, getting your systems and processes in place. The second one was the financials. Just I think getting your accountant on board, and if they can't stretch there, you should really look around on your accountant. If they can't be available to actually help you get your systems, get your own financials in order, show you the opportunities, coach you a bit as well. And there are accountants who can do that. They're definitely out there. Don't accept a mediocre accountant. That's my approach.
Well, yep. I think there's a big differential between an accountant and a bookkeeper, and there's many accountants that operate as bookkeepers effectively, doing your financial, your tax returns. Work effectively. An accountant should be a strategic advisor, and if it's not cut, then you really do need to be looking for someone else. I agree.
In their accountant's defense, sometimes they can do that, but the business owners never ask them to do it. Yeah, or never want to pay the extra few $1,000s a year to do it.
Or perhaps the accountant has been proactive and has offered that advice, but the business owner thinks that they know better anyway.
That's true as well. Yeah, that's actually a good point. Getting advice and not taking it. So we actually started working now with even though we do advise businesses a bit on getting ready for sale, the amount of time we could put into that is quite limited because we're focused on transactions, taking business to market. Yeah, and we started working with an actual exit consultant now as well. So not actually employed by us, but we're outsourced that role to him, and he definitely knows his stuff. He's had multiple exits himself at high numbers, so he's got a good system. And then getting someone like that on board as your accountant can't go. It might be better to look at that option where you get an actual exit advisor over that 12 months to just get everything right for you and work with you, and actually help you get through that process. And probably the third one is just around, it's a bit boring, but around the compliance, like your lease and your licenses, your insurances, contracts. I mean, so few businesses have contracts in place with suppliers or customers, and a lot of buyers really value that. Personally, I think they overvalue it because, to me, any contract is only worth. If you stuff up as a supplier to someone, you'll find that you won't have the contract anymore. So it doesn't protect what they think. So, but they still look for it. Buyers are looking for contracts. So if you can get your key customers on some sort of contract, it definitely makes you more or advantage business for sure.
So they were make yourself dispensable. So effectively have your business processes in place and have it managed as a managed business
as much as possible.
Find a right accountant to make sure that the numbers are on right, and a strategic accountant, so to speak. Yep. And the third one was about making sure that you've got all of your formalities in place, your contracts and agreements. I'd like to throw a fourth one in there, and I think don't use your family lawyer. Go and find someone that's actually a specialist in these transactions and that has the same objectives as you, and that is to get to that of an exit in cash.
Choosing your lawyer can be right at the end. I mean, you actually don't need a lawyer until you've found the buyer. Yeah, so we'll find the buyer, negotiate the deal, get a heads of agreement together, and then we'll approach the lawyer and say, okay, here's the deal. We need a contract. And that's your lawyer's role. Just make the contracts in a way that protects you and get the deal done. And I think a lot of business owners are a bit in awe of their lawyer. Like they feel like their lawyer has the right to tell them what to do. No, they're working for you. Yeah, you tell them what to do. You want the sale done? Tell them to get the sale done. Yeah, and the best lawyers will respond really well to that too.
Look, people need to realise that the lawyer's responsibility is to manage, one of their very deep seated responsibilities is to manage the risk and advise you of the worst possible case scenario. And I've seen a case play out in the last couple of years where there was a full agreement in place. Everybody was smiles, hugs and kisses, and all handshakes had taken place. And then a family lawyer, got involved, and the whole thing just absolutely fell into a huge mess. For that simple reason that they spoke everything in worst possible case scenarios instead of presenting, what a reasonable man would expect out of this outcome. And it was just a shocking thing. It was an eye opener for me in all of my years in dealing with contracts and acquisitions and integrations. That transaction and the way that lawyer handled himself was a shock to me, but it was enough to make sure that it's on the radar in future in terms of, when you're trying to get a contract over the line. Would you really leave it till the last minute? I mean, unless you know, or you've got lawyers that are already dealing with these types of transactions. If a business owner was looking at exiting, it'd be a conversation that you'd at least want to have with them, wouldn't it, at early stages in the sale, to flag that, look, we need to get a lawyer, but these are some things you need to be aware of with lawyers?
But yes, from our point of view, we would have the discussion. We wouldn't engage the lawyer until late in the process. Really, your lawyer any value in the process until the contract ends. As opposed to accountants, where I think is the opposite. The accountants can get involved way back. They should be involved before it goes to market.
Yeah. No, I agree 100% with both of those. So what do you think, in your opinion, is more critical, getting the highest valuation possible for your business or finding the right buyer?
I would say find the right buyer, because quite often the right buyer can throw that valuation or appraisal out the window. If you get someone who's a strategic buyer who can see value there that your accountant or your valuer didn't see, it can rate that valuation meaningless. On the flip side, if you can't find the right buyer, likewise, that whatever value is from the business is ultimately meaningless if no one wants it.
I agree. A sale's not a sale until the money's in the bank.
Correct. Yeah.
It's all about the buyer.
It's different to a house where, I think almost every house has multiple possible buyers. Some businesses, there might only be one buyer. That's the reality. There's some very niche businesses out there, and the fit just might not be there for anyone. That's why some themselves is no one right now who wants to buy that business, whatever the price.
So what advice do you give to those people, for instance, that are in a very niche business and really would want to sell, but the market's just not right at the moment? There's no buyers.
That's a good question. Yeah, so it might be that's the wrong one to look more internally. If you've got an employee that could step into the role, possibly become a partner with you, maybe take over time. That could be an option there. Someone understands the business. There's some where they just won't find a buyer at all. It's not, not an unnatural thing for a business just to run its course and close the doors. It can be messy as well, especially if you've got a lease, if you've got to make good with the premises. Sometimes you are better off selling at a very low price rather than closing the doors. And that's a tough one for some businesses. Like, we'll have a business in the market for 2 years, and the vendor has to realise that that's the likely scenario. Take a price that they find offensive or close the doors. Almost always you're better off taking the price that you find offensive, because the expenses in closing your doors can be quite high.
Yeah. Because it's not business as usual. It's not operating. Yeah, for sure. Interesting, isn't it? It must be heartbreaking for some business owners, blood, sweat, and tears into a business for years and years, and then find that it's really not sustainable.
It definitely is. I mean, for me, being an ex-business owner myself, I tend to live each sale as though it's mine. So I find that when an outcome happens, which that's the reality, does happen. It's tough. It's definitely the hardest part of this job is when you reach the end of that how long their patience lasts and realise it's not going to happen.
I guess the flip side is that they've enjoyed the benefits of that business for as long as they have. I mean, that's the flip side as well. There's a huge difference in being a successful business owner compared to an employee. Difference each there's horses for courses. Some people are better in prefer employees as opposed to business owners. But if you've been a business owner, whether it's sustainable or not, it's a good achievement to have done it for as long as you've done it and run a successful business. That's for
Very
sure.
true. Again, that stat of 80% fail in the first 2 years. So basically, if you've lasted 2 years, you're in the top 20%. That's a good stat. And you just it's a great success. If you sell at or around the price you're aiming for, you've done magnificently well. It's a great achievement.
Absolutely. Actually, talking about 2 years and more, we celebrated 10 years, or we're celebrating 10 years this year.
Congratulations.
Metrics have got 10 years up this year. Yeah, it was a bit of a milestone for us.
In a high change tech world, it's amazing how much your offering has remained a constant. Like with all that's going on around you, like it still ticks the boxes for me. It still works just as well as it did at the start. Well, better than it did at the start.
That's right. Well, I think it's because as much as technology changes, for a transaction to take place, we're not at the stage yet where AI sales people are talking to AI procurement people. So it's not AI to AI. I'm sure at some stage there will be some products that get to that level. But generally, to buy and sell, there's a person-to-person transaction happening in there somewhere. Even if AI has done all of the homework and makes a recommendation, there's still a person that's going to make the decision in there for quite some time yet. So
we're using chatbots back in probably 7 or 8 years ago with the corporate catering business, and I thought then they did the job better than what they do now. Like I feel like then there was a novelty around them, which actually, if you did it well, which we had a pretty good service going there, and we would jump in when required. But I think now the market appetite for chatbots is actually lower than what it was then. But marketing for real people is definitely better.
Well, it's interesting you should say that. I think that what's changed a lot is expectations. So when the chatbots first came around, there was an expectation, this is new, it's going to be clunky. I know, not to have my expectations set too high. These days, the expectations are that if it's not going to answer my questions properly, I don't want to talk to it, full stop. It's not, I won't give it any leeway. It's interesting, even in our own business now, we still see, there was a big uptick in through, 20 through to 22, an uptick of people asking and wanting clarification whether it was a chatbot or a person they were talking to. That jumped fairly dramatically through that time. But even now we see conversations that will start very commanding, demanding and staccato. And then when they realize that there's a human on the other side of it, it all comes down and tones down and it's much more conversational. It's fascinating to watch. You can say, that person thought they were talking to a chatbot, but then they realize
one of our chat metrics chats 2 nights ago, which is exactly that. It's actually the longest one I've seen where the person on the line was, you're not a person, you're a bot. And like, your chat person did it really well. She said, no, I'm a person. Would you rather talk to a bot? Yeah, very well written.
I can get a bot for you if that's what you want.
Yeah. He ended up giving us a lot of information. Actually, like it was one of the better chats I've seen.
Oh, that's good. Look, the market in the local Illawarra and Sydney, what unique challenges and opportunities do businesses have in the region when it comes to selling? Is there anything unique for that particular area?
Well, in the Illawarra, we're definitely seeing, we're quite an industrial area here, like I said, the big steelworks and a lot of support small businesses around that.
I know that still works pretty well. I worked for them for 25 years with the broader organisation. Yeah.
Well, that's going pretty well. I think there's plenty of opportunities around that and plenty of demand actually. So there's a lot of acquisitions happening between businesses there. The Sydney area, I think there's struggles with, probably everywhere at the moment. Retail is tough. Like that's a hard business to sell because very few businesses are doing better than they were 5 years ago. So it's a hard. Hospitality is strong in both regions. I think there's, Sydney CBD, we're not involved that much in that area, but I think it's a bit tough in that space still. Whereas Wollongong is back to normal. Like it's actually pretty good in here. We'd love some more listings in this area. Actually, it's actually hard to get business to sell in our area, which is a good problem to have in a way.
It's a very good sign of a healthy economy, I guess, to the next stage when it'll be the cycle of, you mentioned before about redundancies for the owner operator or, buying a job type businesses. You see there's large organisations that in particular areas reliant on, the steelworks you mentioned has been through that And so there's a lot of stability, I think, from an employment and economic perspective in that region there, which just creates a stability and probably it depends on more of an age, I think, of the business owners and where they're at in terms of what they want to do in their next steps, as opposed to, I mean, look, it's always a good thing. I always say, the time to get out is when you're riding on a high.
Definitely, yeah. That's interesting for the age of the business owners too, because that's a big change that's going to happen in the next 10 years. The amount of baby boomer owners that are still hanging in there, it's extraordinary. They all need to transact at some stage, and most of them don't have a transition plan with family, which probably was what their expectation 10 or 20 years ago, but their kids have gone and become professionals and they don't want to take over the fabrication business or whatever. So there's market of potential sellers there. And flip side, the younger buyers are emerging too. They've got an interesting entrepreneurial flair about them. The Gen Zs are definitely different attitude to it all. But I think there's a few mismatches there on what they expect out of business and what the reality is. But yeah, they'll learn. They didn't react it.
One of the things I've become aware of lately is this concept, and it's been promoted in a couple of areas, but this concept of potentially buying a business for zero up front. It just came to my mind then when I was thinking about it in terms of those businesses that are going to actually shut their doors. There's an opportunity to match a potential buyer. Somebody's been hanging in there for 2 years. They can't find a buyer full stop at any price. Then, your comment about, selling at a lower price might be better than maybe vendor financing, even potentially to have them, show the new owners the ropes, so to speak, over a 12 or 24 month payout period, still might be a better situation than shutting the doors. And I guess we come back to that comment then, ideally, if you could set up a little corporate rocket team that just go in, set up, their whole focus is to set up business processes. They don't even really have to know the industry. These things need to be done in a business, marketing in, this is the process in the business, customer service on the other side. And, if you get that set up and rocking and rolling, I think it'd be a recipe for success.
We've definitely seen a rise in the zero upfront inquiries. It's a tough conversation. Especially the older vendors who are very suspicious of that, and like for them, like not being tied to their business is a big priority. Like they're ready to sell, they're ready to go, and when they get that kind of offer coming in with a zero upfront, we want you to stay around for 2 years. They really don't like it. It's actually a hard one to pass on.
I get it. And the unfortunate situation or the unfortunate reality is that that's a situation that they've built by not having the business fully managed and fully, not reliant on them. So, yeah. So it's one of those situations. My wife's in the process at the moment of putting a manager. Well, she's had a couple of managers in place, but finding the right manager is very difficult. And I think that, that's one of the challenges that holds business owners back. It's okay to say, get a manager. And she's on a third manager in 4 years now, and with a huge amount of effort for each one. You'll never find anyone that does everything the way you do.
Right.
But you've got to find someone that can run the business and look after the clients and deliver the results that you expect. And that's been a real challenge to find. So she's working through that at the moment with a good manager that's in place. It's been an interesting conversation that I'm pretty close to as well because of what she's going through in her business of getting a manager in place. So it's a challenge. It's certainly not easy, that's for sure. Right. If there was a magic wand team, that's why I keep coming back to that point about if you could put together a crack team that would just come in and set it up and move on, then that'd be
then main focus is getting it to a resale in 2 to 3 years. I think that can be a good space to be in. And even if you let hire the person, each one to be the ongoing manager, but you just get it tidied up, hire the right people, incentivize them, and then move on to the next projects.
Absolutely. Justin, look, that's been an amazing conversation. Thank you. How can we get in touch with you? If people are interested and want to know more about whether it's an exit in your area or even just some advice on getting ready to exit a business. I mean, I know with your background, it's not limited to any particular type or style or region. You've got a depth of knowledge and experience that can really help anybody who's looking at an exit.
Yeah, we're happy to help any industry. In fact, every appraisal we do, it's part of our learning as well. We learn more about a new industry, a new business. So we're happy to investigate that. All our appraisals are free of charge. no obligation. So the best way to contact us is probably either through LinkedIn or just emailing justin.bunt@mmj.com.au. The MMJ is the organisation I work for. They're quite a large real estate business that's been going since 1960. Began in Wollongong, then I've got offices in Melbourne, Sydney, Perth, and Canberra as well. So they're pretty much a national exposure. A lot of commercial focus, especially won the Commercial Agency of the Year just 2 weeks ago at the New South Wales Real Estate Awards.
Yes, congratulations.
So that was the second time I won that award, up against all the big players from Sydney. It's a great company with a great range of experience and knowledge in property as well as business sales. I think with any business sales team in our area, there's 4 of us on the team that just do business sales. We don't get involved with anything else. We're very focused on that sort of thing. Very happy to help anyone who just needs some advice about where to start even, because that's often the first step can be the hardest. I definitely would advise, getting an appraisal, whether from us or someone else, just to find out where you're actually at. It's different from evaluation, which is done by a valuer. Not quite as intense in a way, but at the same time, it's more focused on what's happening right now in the market. So I think a business broker generally will have a better idea of that. You can do your online, automatic ones, put your data in, but our ones generally take us about 3 or 4 days to grind through the numbers and actually look at where potential ad backs are, which is very hard to do on the online drop your answers in here type thing. So better to get a customized one that actually understands a bit about your industry and where it's at and your numbers.
Mm. And when you do that, then you get a better insight in terms of potential areas that they need to cover off on or things to get ready for in terms of that exit as well.
Definitely. Yeah, we can definitely give some, I wouldn't say we're skilled consultants, but we can give some tips there about directions to go in and start the ball rolling. We've had plenty of actually come to us and we've said, you could list it now, but you're probably going to struggle to find a buyer. But if you go away and do X, Y, Z and come back in 6 months or a year with numbers like this, which is where you can get to, then this is where you sit in the market. We're not accredited.
Justin, are there any books or literature or anything that you'd recommend that anyone that's thinking about an exit should have a read of?
There's a guy in America called Matt Blackie, and he's got a couple of books. His business is called Exit DNA. His resources are pretty good. We're actually working with a consultant in Australia who rolls out his program here. It helps businesses get from where they are to an exit. I can't remember the title of his books, but he's got a couple there. But his Exit DNA platform is definitely worth checking out. He runs masterclasses where you can sit in a group with experienced entrepreneurs and learn a lot of things from that as well. I like a lot of his angle. He's sold 7 businesses himself. He's done extremely well from exits, so he understands it firsthand.
Okay, excellent. Look, I'll grab those links and those titles off you via email after if you can, and we'll put them in the link down below for everybody to have a look at.
Yeah. Great.
Have I missed anything, Justin? Is there anything that I should have asked that I haven't?
No, I think that's about it. I think my advice to anyone, I know a lot of your listeners will be business owners, but it's just always have your business as ready to sell as possible. So put the things in place. They're generally just good business practice anyway. A lot of them will actually make you happier running a business. Like if it's less dependent on you, you'll be happier as well probably. So do the stuff that you need to do so you're ready to sell just in case something happens. It could be a non-business reason why you need to sell in a hurry. If you're ready, it can make a very big difference to your exit outcome. So just be ready all the time. Don't put it off. And that's the best advice I can give any business owner, really.
Yeah, fantastic. I couldn't agree more. I think that's fantastic advice. Be ready. You never know whether it's your own, non-business related circumstances or the right buyer might just come knocking on your door.
Right. See, that's a big part of that Mac Blackie training, the Exit DNA training, is you have to be ready for that phone call. It's your rubbing your biggest competitor saying, we want to buy you if everything's in order, and if everything's not in order, they don't buy you.
So it's interesting you talk about your competitors. That's exactly what's happened to one of our clients 3 months ago. 2 reasonably large players, one's 4 times bigger than the other, but they've both got good chunks of market share in a particular industry. This is in the US, and the large one acquired the smaller one. Then all of a sudden they've got just that beautiful environment of, yes, sure, there's synergies from the acquisition in terms of cost down because you're bringing two businesses into one. But the bigger focus for them is actually the broadened customer base, and then the being able to upsell cross products into both of those customer bases. It really is. I mean, had a look at the acquisition or the transaction over the weekend. It's going to be very, very good thing for that business for sure.
Yeah. Hopefully your services can be spread across both as well.
Well, we'll see. Fingers crossed. I think they'll certainly benefit from our services. Whether they decide to continue them or not, then that's a decision. Hopefully I'll get to help them make. Yeah. It's very early stages at this stage, so. Yeah.
I think it's covered it all, Jared. It was a good chat. Definitely, you know enough about business yourself. There are good insights there, which is good. Good questions.
Thanks, Justin. Appreciate that.
No problems.
Thanks for coming on the chat. We'll see you next time.
Thanks, Jerry. See you.